Today, we're going to unravel the intricacies of the home loan process, making it a smooth journey for you. Understanding these steps can transform an overwhelming process into a manageable and successful endeavor. Let's start by exploring what you need to know. Initial consultation and needs assessment. Your lender will play a crucial role in guiding you through the loan process. They'll start by asking detailed questions to understand your specific needs. This isn't just about offering you a rate, it's about tailoring a loan program to suit your financial situation, considering factors like your down payment capacity, credit score, and debt-to-income ratio. Pre-application cost estimate. You'll receive preliminary cost estimates for various loan scenarios. These estimates, based on your credit score and an estimated property valuation, will give you an idea of what to expect. Remember, your final pricing depends on verified credit scores, property valuation, and market conditions at the time of your rate lock. Document collection. A successful application relies on timely submission of necessary documents. Your lender will need your income details, bank statements, and tax returns. Swift and accurate document provision helps speed up the process. Loan estimate and intent to proceed. Once you've reviewed your options and are ready to move forward, you'll receive an official loan estimate detailing all associated fees. This is an estimate, subject to change based on the appraisal value and when you choose to lock your rate. Your confirmation to proceed, sometimes involving a fee for credit score retrieval, is the green light for your lender to go ahead. Appraisal and underwriting. An appraisal determines your home's value, crucial for the loan amount approval. After this, your loan file goes to underwriting, where it's thoroughly reviewed. Be prepared to provide additional information if the underwriter requests it. Rate lock and final approval. You have the flexibility to lock your interest rate at various stages. It's crucial to lock it for a duration that covers your expected closing period to avoid any rate changes impacting your loan cost. Closing phase. Upon receiving the final approval and clearing all conditions, you'll be clear to close. You'll receive detailed instructions about acknowledging your closing disclosure and the steps to finalize your loan. Closing disclosure and signing. Your closing disclosure, received at the end of the transaction, outlines all loan costs. Compare these with your initial estimate and discuss any discrepancies with your lender. The final signing is coordinated with a settlement agent or attorney, depending on state laws, involving various parties to finalize the deal. Remember, most loans take about 30 to 45 days from start to finish. Staying in constant touch with your lender and addressing any queries promptly is key to a smooth process.
Thank you for watching my video. I hope you found it helpful, and I hope you would like to discuss it further. So if you would, please feel free to call me, Mitch Milat, Riviera Financial Mortgage, 424-290-8294. You can also email me, mitch@rivierafinancial.com. You can also find me on Instagram @MitchellMilat or on my Facebook homepage, Mitch Milat, Riviera Financial, Beverly Hills. Thank you so much. Look forward to talking to you soon and wishing you much success in the future.